Those first 2 quarters of 2025 are now behind us. And today I'm coming to you with an update on my dividends received so far this year. I am Lisa J. Stocks. Like, subscribe, and hit that notification bell. So, we're going to take a look at those dividends that paid me. Stock market news like Microsoft increasing their dividend by 10%, the S&P 500 hitting all-time highs over and over again. So, we'll be going over my results related to those investments that I added to my portfolio strictly for dividend growth, as well as those growth stocks that happen to pay a dividend. This update is strictly my taxable accounts, which I've been focusing on building up over the last few years. I will be coming to you soon with an update on my retirement investment into FXAAX, waiting for that dividend to hit. So we'll be looking at Microsoft, Google, Meta, Realty Income, Main Street Capital, and more. Some investments thriving due to AI in hopes of a Fed rate cut, some ETFs lagging behind, but we're going to break all that down. Starting with Microsoft. So they raised their quarterly dividend by 10% from 75 cents per share to 83 cents. These tech stocks have a lower dividend than some of the others that we're going to move on to, but this is a signal of confidence from this AI cloud giant. Over the last year, Microsoft is up 10.97%. And another signal of confidence that I saw a headline related to Microsoft is that they're going to be having a $60 billion share repurchase program. So they're betting on themselves for the long term. Next up, Google, which is down over the last year. It's currently $180.65, down from its year high of 207.05. Google is newer to paying a dividend, just 20 cents per share quarterly, but they are a company that's trying to stay relevant when it comes to the AI wave, as well as their ad revenue and their Wade driverless vehicles. Now on to Meta. Year to date, up 23.01%. Another tech giant that's throwing in a dividend to reward its shareholders. Their stock has been fueled by AI-driven ads. And like the other two tech giants that we just took a look at, they are fueling VOO, which we are also going to be taking a look at. So when it comes to Meta, UBS has recently boosted their price target from $683 up to $812. So that suggests a potential upside of nearly 15%. And looking at the overall analyst ratings from multiple analysts over on the Moonwheel Investing app, they're giving it an average price target of 737 and a high of 918. Now on to Target. And this is one that I plan on cutting from my portfolio when their stock price turns around a bit. But when it comes to Target, they are a dividend aristocrat. They pay a dividend of $1.12 per share quarterly. Over the last few years, they have been having their struggles with boycotts and high theft rates, just to name a couple of their issues. But they are focused on giving the consumers value, affordability, same day delivery, and that's where they're aiming to win shoppers. So you do get steady income, but I like this type of investment to be paired with share appreciation also. And Target has not been giving me that. Now, VOO, the S&P 500 ETF from Vanguard, year to date up 6.45%, over the last year up 12.16%. These type of ETFs usually have a low dividend yield of a little over 1%, but I have it in my portfolio for growth and stability, as well as that low expense ratio that does not eat away at my returns. When it comes to the S&P 500, just in the month of July, they've hit several all-time highs. So this is the indice that VOO tracks. On July 2nd, it hit a high of 6,227. Then on July 3rd, both the S&P and the NASDAQ index hit record highs. And then again on July 10th, it pushed even higher to 6,280. We've seen similar movement when it comes to VTI, which tracks the entire US market, but because it is weighted by market cap, the top companies are going to be those same that are driving the growth of the S&P. Now let's take a look at SCHD, which tracks the Dow Jones 100, known for paying a strong, consistent dividend, but investors have been frustrated with this one this year. It seems like their reconstitution and some of the changes that were made were extremely bad timing with what went on the economy, with the tariffs, threats of war. So currently underperforming its peers, but I'm holding on to it, not anywhere near ready to cut this one from my portfolio. Now on to the first three investments that I started building into with the goal of dividend growth. We have SPHD, Invesco's S&P 500 high dividend, low volatility ETF. Over the last year, it's up 7.3%. This one is also lagging a bit, but it offers stability in that steady based monthly dividend payment. Now on to Realty Income, known as the monthly dividend paying company. It is a REIT, a real estate investment trust. Year to date, it's up 6.95%. They'll be having their next earnings report coming up on August 6, 2025. So, Realty Income holds properties across 10 different industries like grocery stores, convenience stores, dollar stores, home improvement. So, their clients are those big, well known names like 7-Eleven, Dollar General, Walgreens, as well as other big names like FedEx, BJ's, your local gym like LA Fitness, Home Depot, AMC Theaters, and Walmart Sam's Club. So stable, reliable tenants, which has led to an occupancy of 98.5%. The company has a history of maintaining high occupancy rates, never dipping below 96%. So this has led to them being able to be on track to consistently raise their dividend. They recently announced their 661st consecutive common stock monthly dividend. And this is one that I'm currently holding, not building into right now because it's one of my largest positions at over 100 shares. So focusing on building up some of the others that are still below 50 shares. All right, last up, Main Street Capital, which is a business development company, up 7.34%. Over the last year, it's up 21.02%. And they have been benefiting from those higher interest rates, boosting its loan portfolio. And for some time now, they have been incorporating an extra dividend on the quarter, which you'll see when we take a look at my results right now. For the month of June, I've received $176.12 from those blue chip stocks, ETFs, monthly paying dividend companies that we just touched on. So Main Street Capital, Realty Income, and SPHD are my monthly payers. So they're in every update that I give, but the others vary. And on the quarter, it's going to be the more substantial months. Here's a look at my year-to-date results so far. I have my Main Street Capital, Microsoft, Realty Income, SCHD, and SPHD. My largest dividends are coming from Realty Income and Main Street Capital. And then over on Public, that's where I do my $10 daily investment into VTI. Year-to-date, my dividends received are $55.40. And then on Webull, that's primarily my growth portfolio. There is a little bit of overlap with Realty Income and some of those foundational ETFs. But over there, my highest dividend is coming from VOO at $68. So far, for the first half of the year, my dividends received are $558.75. So in this market, I like to stay diversified, having additional exposure to those tech giants, having those ETFs for stability, steady growth, steady dividends, and mixing in a few of those dividend-focused investments is my way of balancing and trying to create growth as well as income in my portfolio. So when it comes to my dividend-focused investments, those top three that I added, the monthly paying dividend companies, Main Street continues to be my top performer. That has given me that steady growth as well as that dividend. I'm up 47.39%. And as I mentioned, when it comes to Main Street, they pay an additional bonus dividend on the quarter. So you see in March and June, my dividend payment is higher. And behind Main Street Capital, for growth and steady dividends in my portfolio, I'd have to give it to SPHD, which I'm up currently 16.36%. So that's it for my dividend update through the end of Q2. Let me know in the comments which one of these investments are you holding? Are you adding anything new? Any plans to rebalance and cut any of the positions that I shared today? Let me know your thoughts. Check out my referral links. These are all ways that you can support the channel. Thanks for watching. Okay, bye.